Hi, everyone, and welcome to another episode of Living on Blockchain. Today, we are speaking to Gagan. Gagan is a seasoned product leader with extensive experience across various high-tech companies. His current work is at Circle, which is basically obviously focusing on making global value exchanges frictionless through stablecoins and developer products. He has also co-founded All Minds, which aims to provide accessible and high-quality mental health care. This is an insightful conversation, delving a lot into stablecoins and USDC, about their future milestones, the developer products, and general issues plaguing the ecosystem. I can't wait for you guys to hear this. Let's deep dive right in. Hi, Gagan. Thank you so much for making the time to speak to me today. How are you doing?
Hi, Tarusha. Doing really good. Thanks for the opportunity.
Oh, I'm really glad that we could make the time, considering we're in very different parts of the world, and the time zones are very different. But for our listeners, can you tell us a little about yourself and what you're doing currently, how you got into Web3?
Yeah, absolutely. So I am currently, so first, hello everyone. I'm calling from San Francisco, and I work at Circle. I lead the developer products team. I'll describe a little more what that means. And so there are two questions there: what I work on now, and how I got into Web3, which is an interesting story as well. So Circle, as many of you know, are issuers of USDC, US dollar coin. It is a one-to-one backed coin with fiat reserves. So you give Circle one US dollar and you receive one USDC in return. When I say you, I actually mean large institutions are able to get access to USDC directly through their fiat currencies. And the smaller companies, individuals, you experience USDC via OTC desks or via exchanges. It's primarily used in three purposes. So either earning yield in DeFi, or as crypto collateral for exchanges, or for trading, buying and selling Bitcoin and Ethereum. My role at Circle is to actually make USDC useful on as many blockchains as possible and develop the infrastructure that enables Web2 companies to offer not just USDC, but in general, crypto assets to their end users. So some of the products that my team builds are the USDC protocol improvements, URC, CCTP, which is cross-chain transfer protocol that enables USDC to move from one blockchain to another natively. Right. And then the application stack on top, which is, we termed it as Web3 services. It's a collection of programmable wallets, a wallet as a service product that enables any Web2 company to embed wallets in their application, smart contract platform that enables tokenization of assets, and compliance services on top are as well a part of the product. So as you can think about it, it's like a full stack that enables any developer to utilize Web3 or bring Web3 to their users. Right. And then what got me into, go on.
So I was just about to say that, like obviously, I think everybody has heard about Circle and what you guys are doing. It's an entire suite of tools that, developers can use, and we've used it. I'm pretty sure that our listeners must have utilized your services or your products in one part or the other without really knowing perhaps who's behind those products. And this is a wonderful way for them to perhaps understand who is actually building these wonderful tools.
Yeah. Yeah, that's
Can
true.
you tell us about your journey? Yeah,
absolutely. So I was working for background, I am an engineer by background. I've coded since I was in high school, a self-taught programmer. I started my career working in the internals of Android phones at Qualcomm, and then wanted to build more fast developing software. So I went and built UI for Amazon Fire TV and Amazon Music, and I always wanted to build a product and a company. So I was dabbling on the side with new technologies, and I came across Twilio, and we are talking in 2015. And my experience at Twilio was actually foundational to why I thought about Web3 and crypto, which I'll get to in a second. So basically, for people who do not know Twilio, anytime you are calling or messaging your Uber driver, you're likely using Twilio in the background. So Twilio provides APIs for developers to embed communication, voice and SMS in their applications, right? So working at Twilio was like a remarkable experience. I was there when the company was 250-ish people, and by the time I left, we were 3,000 people. And many of the companies I saw that at the time, they were building like really cool, innovative products, like all the way from a demo I saw detecting Parkinson's from a phone call based on voice analysis, or marketplace and ride sharing companies like Uber, TaskRabbit, Lyft. You guys are familiar with those. And two-factor authentication. So when you're entering your password and you get an SMS to validate that you are the right person who actually entered the password on your phone number. So that's, again, all these kinds of use cases got enabled with Twilio. And something absolutely out there, I saw a use case where Coca-Cola vending machine would send an SMS to the contact center for a dispatch when it runs out of Coke. So the what struck me was that telecommunications had been a completely offline concept where SMS and voice was a part of is highly regulated. It is geo-bound. So for instance, like in India, if you have Airtel or Reliance or BSNL, these are not the carriers that are operating internationally. Similarly, in the US, we have Verizon, T-Mobile. And so a lot of the carriers are generally bound to the geos that they operate in. And people pay a lot for international connectivity. So interconnect fees are really high. I grew up in an era where when you had to make an international phone call, you had to stand at an STD-ISD PCO booth, and from there you would be watching a ticker, paying a lot of money as you are spending time on the call. In some ways, I feel the experience with money is very similar. So because banks are generally geo-bound, they're bound by the boundaries they operate in and the boundaries that are set by the government of local countries and local jurisdictions. But I, of course, did not know this when I was at Twilio. But my experience at Twilio was really fun. I enjoyed building for developers, and I enjoyed like watching what happens when you connect an analog asset, or which is a construct that is completely off the internet, connected to the web, and suddenly new use cases start emerging, many industries change. Well, at that time, I was still naive. So I went on, I was like, I wanted to do more consumer products, like, which is, always fun to be able to tell your friends and family, like, what you're working on. So I went on and did, like, anytime, again, like you're calling and messaging your Uber driver, that's what I was working on at Uber, and then built Ray-Ban Stories, smart glasses at Facebook. And then after 5 years in consumer products, when I was revisiting my career and thinking about what I want to do next, I had studied blockchains and Bitcoin and Ethereum for a while, but I had never thought that I would go work in fintech or in crypto. It was something out of curiosity. As a technologist, I was, of course, aware of, dabbled in it a bit. And then when I was thinking about money and what could be as big as communications, I wanted to work with developers. I wanted to go back and work in a disruptive space. And the spaces I was thinking of were actually, either fintech or in AI. I had done some of the work in AI when I was working on Ray-Ban Stories at Meta. But what fascinated me about Circle and crypto at the time, and this was my formal entry into Web3 and Circle about 2.5 years ago, is this same notion that money is an analog, or has been largely an analog construct, that infrastructure is so dated. It is 30, 40, 50 years old infra that is still in use. And what if money was completely native on the internet? How could you bring an analog construct of money with all its properties onto the internet and make a new internet financial system? So that concept fascinated me. And then I heard Jeremy Allaire's podcast. He's the founder of Circle, on money movement. I heard about him talk about programmable money. And what struck me about Circle was it was something very similar to what Twilio was doing. So Twilio had connected all the carriers on the back end, which were geo-bound, and then created this concept of programmable voice and programmable SMS. And so it enabled communication to happen natively on the internet and just use the telcos for connectivity. To me, it's USDC is something very similar. It's like Circle is connecting all the banks or numerous banks around the world so that people can on-ramp into crypto via USDC and get access to digital money through the fiat currencies they are in 24/7. And once they have USDC, that money can actually move around natively on the internet using blockchains. So at that point, a user in across different countries, it doesn't matter which country you're in, as long as you're connected to the internet, you have access to digital money, and that concept is super powerful. So when I analyzed the company, I felt like the company had done the great work of creating USDC, but a lot of developer infrastructure that is needed to make it widely available and useful was still not there yet. So my pitch to Jeremy was to let me come and build that. And so that's what I'm doing at Circle.
This is absolutely wonderful. It's quite a beautiful journey in the sense that your motives are very aligned with what Circle is building. Like, it's very rare that you come across somebody who gets into a space with certain intentions, with certain ideas in mind, and they kind of find a project that perfectly fits their vision, which is from what my understanding is, which is what happened to you.
Yeah, that's something which I've been very fortunate with, and I do not take that lightly. It happened after many years of working, so I'm very grateful for like that fit, because it's been really fun journey working in Web3, the ups and downs with a fantastic team, and so it's been very rewarding.
Right. No, I'm sure that it is very, very rewarding. You've kind of worked with Meta, and you mentioned Twilio already, Uber and Amazon, and you mentioned Qualcomm, etc. as well. How was working at these companies? How has that kind of added to your vision and your approach to perhaps product development and leadership, and what you're doing here in your journey? What were the kind of takeaways that you had that you bring to the table here? You've kind of touched upon it already, but I would love to understand a little more, because you came from all of this experience and now you're building here. Are there any takeaways from there that that are helping you here in Web3 as well? Because these were primarily Web2 companies.
Yeah, absolutely. That's a great question, actually. So it's something I think of often, as over the last 10 years, the work over the last 10 years, especially starting from Amazon, there are values that I have absorbed from each of the companies I have worked at and have admired. And there are things that I also, of course, not everything is always rosy. So there are things that I have dropped along the way and learned what not to do, which is equally important. So, for instance, one of the core values that I operate with is a no excuses mindset, a radical ownership mindset, and that is something I saw in practice at Amazon, where you are an owner regardless of like what you work on. I was working as an engineer, a junior engineer at Amazon, and even then I felt so empowered, like things are in my control and I can affect change. And so that's like the number one principle that to operate with is like no excuses. It's high ownership. There are things that are like I feel the agency to affect change, even if the work is not in my function. So if I'm working on a product team and there is something blocked on an engineering team or marketing team or legal team, I make it like the success of the product is my problem. So I'm going to go help the different teams solve whatever they're blocked on. And that is something that I felt like in different companies, cultures vary, and in some companies it's easy to or it's not easy, but like people tend to limit their role to what they believe their function is. But product inherently is a cross-functional role, and a no excuses mindset is like a really important in the product function to succeed. So that's like number one thing which I operated with right from Amazon and operated throughout my career, and I sustained it. Actually, what I learned was something which is like the power of builders and developers and celebrating our customers really well. Because I felt like, that's the fun thing in building for developers. Like people are investing their blood, sweat, and tears into building a product. They're investing their precious time, and you've got to help them succeed. And unless you operate with the utmost sincerity towards your customers, and if you watch them succeed and grow, it's very rewarding. So I think building for developers, keeping a humble mind, and there was a value of Twilio which I really admired, was called no shenanigans. So no shenanigans is basically no gimmicks, no. You always operate with like operate to add value. You don't create any, don't generally, don't fake value, actually deliver value. So a no shenanigans mindset is like a second value that I really admired. I'll speak of two more over the years, and we can you can like you can ask me more about it. So the two others are one is draw the owl. Draw the owl means it's a fun meme on the internet. If you want to draw an owl, hey Google, help me draw an owl, right? And it'll tell you like draw a circle. Step two, draw a bigger circle. Step three, draw an owl, which means that there is no one way to do things, and you have to find your own creative ways to solve problems. And so that is again like an empowering mindset where there is no cookie cutter solution. In Web3, especially, this is true because many parts of the space haven't found product market fit. So what is the answer? We can't look for answers, externally. We have to find answers. We have to operate from first principles, and there are no cookie cutter answers. So that mindset helps a lot. And that's something like I've retained over the years. And then a lot of management lessons I learned were from Facebook, and hustle I learned was from Uber. So management lessons, like Facebook operates with urgency, like the size of the with the size of the company it can literally pivot on a dime. And we have seen like Zuckerberg do that over and over again, and it's incredible to watch. It's also created a very high performance culture, really principled performance management. So those management lessons I absorbed a lot from Facebook, and so all of this, the amalgamation of this high ownership mindset and no excuses mindset, creativity and management is what I try to work with at Circle as well. And what I really enjoyed working on with Circle is the Circle has this mindfulness as a core value, which encourages deep listening, which encourages standing in someone else's shoes and understanding their perspective. So it really feels like a complete structure right now, both in like how I operate and the urgency with which I need to operate, because again, Web3 things move so fast. One very important factor in Web3 why these principles really matter is because Web3 is very noisy, right? Like we have there's a hype train always going on. There's always this next token, always this next use case, and there's so much infrastructure being built. So it gets hard to figure out what is something that is lasting, what is true, and what is a trend that will fade. And I come across a lot of activity in the space which sounds like trends. And so it's really important to think from first principles and stay focused on delivering value and no shenanigans. And only then you can build like lasting companies or lasting products over a period of time. So Web3, I think like it actually operating with such values helps a lot in Web3.
I would completely concur with that. I think what you just said, these are very universal values that will help whether you're building in Web 2 or Web 3. And having been imbibing those, perhaps the values from the kind of experience, I would imagine that, your journey has been really wonderful. You mentioned mindfulness as something that, you've kind of also imbibed from Circle. And that kind of brings me to the other venture that, you're associated with, All Minds. Can you tell us a little about that? Because I do believe that is to do with mental health.
Yeah. All Minds is a public benefit corporation. It is a company that a friend of mine and I co-founded in 2019, and it was encouraged by some of the patterns we were seeing, like our own personal experiences and with our friends and family trying to get access to therapists. And there was a stigma associated with mental health. There's also like we found that it was very expensive to get mental health care, especially in the US. And it wasn't like commonly understood what the benefits of getting mental health care are, who should get it, when do they get it, whom should they get it from. And when we saw my friend and classmate from Berkeley, Juan, him and me, we had a similar experience. We had tried to build a company in the past. It's a problem that really deeply resonated with us. And over a period of the last 4 years, both of us have kept it build this mental health care practice, or which is a combination of part clinic and part technology, or you can think of it as a technology-powered clinic with the mission to enable access to affordable but high-quality mental health care for everyone, or democratize access to high-quality mental health care. So the way we do it is like we step by step, we have built our own software stack for clinicians who are our own partners and employees of the clinic. And the clinic is run by a wonderful woman, and our partner, her name is Tangia. She's has operating experience of clinic for over 20 years. And so our main value that we deliver is we enable people with insurance to get access to therapists within 24 hours. And they do not have to pay the full cost out of pocket because they get reimbursed by insurance. And so we have licensed clinicians working with insurance companies, and we get patients of all kinds of severities, mild to high severity, and we do behavioral healthcare. And we have north of 150 therapists who are working with us right now. And that's something which we continue to run.
Yeah, it's wonderful. I think, mental health and just throwing light on it, making it more prominent. As you said, that there's a stigma associated with it all over the world, I believe. And just getting it out of the shadows and providing kind of support, which is very necessary, is important. And especially like you mentioned in USA, it can be quite expensive to opt for such therapies. You guys are doing a wonderful job in catering to that particular, segment of audience. What is the kind of traction that you've seen on the platform so far?
We are a small but mighty, small but profitable company. I will not disclose the numbers publicly, but you can imagine that like I said, no shenanigans approach, right? So we do not advertise. We have a solid and growing team, and we are heads down. We have not raised much funding externally. We haven't needed to. So it's a bootstrap company. The Berkeley House Fund is the only fund we got like an accelerator round. You can think of it like a YC initially to help us, because both of us are outsiders to healthcare and we were passionate about the space. So it helped us understand and how to work with insurance companies and get our clinic set up. But beyond that, we have not raised funding, and we are knock on wood, on the path to achieving our mission, fulfilling our mission. It's not just ours, but there are many other companies, larger and small in the space, who have similar aspirations. I think there is a lot of growing need for mental health care. And it's something that we feel, we approach in a very humble and sincere manner to do our part to make it easy for people. So we are solid, but I would not talk about the numbers here.
Yeah, that is perfectly fine, but kudos on what you guys are doing there. Now, coming back to Circle and talking about stablecoins in general. Like, if we zoom out a little bit, can you tell us a little about the role of stablecoins in the future of the global financial systems?
Yeah, so the role of stablecoins. The way I think about stablecoins is, if we think about money in general, so money has three functions. It's a unit of account, a store of value, and a medium of exchange. And we have, there's a good framework to think about money. So unit of account being that you should be able to price something in it. Store of value, as in your savings should not deteriorate; they should grow over time, and you should feel comfortable keeping your money, keeping your savings in the denomination or in the form of money that you feel secure with. And then medium of exchange is basically like, trading, buying and selling goods. So USDC is fulfilling all these three tasks today, or stablecoins in general are fulfilling all these three tasks. Stablecoins have found product market fit as internet money in crypto assets. So what I mean by that is, in high inflation countries, people are using stablecoins to hedge against inflation. So they are able to get access to crypto dollars and get some yield from an Aave or from a compound pool, and they can get like 3, 4, 5% yield. And so that's working USDC or a stablecoin working as savings, dollar savings account or a store of value. And then you're buying and selling your digital assets all day long, NFTs, Bitcoin, Ethereum, any meme coins using USDC and USDT. That's medium of exchange. And a lot of these digital assets are priced in USDC. So you go and you see BTC USDC pairs or BTC USDT pairs or stablecoin basically are being used to price these assets. So stablecoins have found like product market fit as internet money. Now the question is, what else can they do? And to me, it's like, if we think about the market size, it's massive. It's like there's $100 trillion of money on the internet. And there's about $3 trillion of payments related activity that happens on the internet. And at any given point, I think there's a number on like in the order of low single digit trillions that is stuck waiting for settlement on the internet. A very interesting example is a sovereign wealth fund, a company that works with the sovereign wealth fund on shipping jet fuel to US, UK, and Netherlands. This company has to spend $1 million+ per week waiting for the payments to settle in their account before they can dispatch jet fuel. Now, similar to that, so for settling, it basically, like to simplify it, whenever you are sending money from across borders, there's usually a T+2 is like it's 48 hours plus settlement time in most cases. That means like the receiver will receive money in their account in like about 48 hours. And stablecoins do not have this problem, right? Like just like how on WhatsApp, instantly you can receive messages on the internet, with stablecoins and crypto wallets, you receive value instantly on the internet or in near real time. So to me, like stablecoins have enormous utility and growing utility in cross-border trade to settle payments fast. It has enormous utility in cross-border remittance. When you're trying to send money to friends and family, you should be able to do it. You should be able to do it like you communicate with them. When you're trying to save in countries like there are numerous like South American countries and Middle Eastern countries where there is high inflation, and there we see an organic demand for stablecoins to be utilized as a savings, as a form of savings. So we like whatever stablecoins have accomplished as or have proven to operate as money in the crypto native assets. I think the utility of stablecoins is much bigger and broader for all forms of money on the internet.
Right. Yeah, you're absolutely right. I think stablecoins have found a great PMF. But this kind of leads me to two questions. First, I'll go with the challenges. So what are the kind of challenges that your team has faced so far in establishing a stablecoin and just promoting other blockchain-based products that you guys are building?
Yeah, that's a good question, and thank you for asking that, because from an outsider point of view, when I meet a lot of people, especially at conferences, people think, oh, stablecoins is such a great and easy business to operate. It's easy money. No, it's absolutely not. It's really hard to do stablecoins the right way, and I'll describe like what and especially like that is where I give a lot of props to Circle for the amount of energy and effort it spends in ensuring that it is complying with all the regulations around the world, not just in the US, around the world, to make sure that stablecoins can be operated as internet money. So, for instance, USDC and EURC are the only stablecoins that are only major stablecoins that are like MiCA compliant. MiCA is a framework in Europe that for crypto assets and for stablecoins, it basically like legally approves USDC to operate as internet money in all of EU, which is like a really hard thing to do and achieve. And then creating like banking partnerships around the world with the top, they're called globally systemic important banks, GSIBs, is a really difficult thing to do because crypto is inherently risky and banks have a low risk appetite, right? But you need on ramps and off ramps around the world in order for people to experience digital assets. So a lot of the work that Circle has done and continues to do is on the financial infrastructure and on the legal and regulatory side, which I think is not just good for Circle, but good for the whole crypto ecosystem. Like I think like probably USDC is the largest clean on and off ramp into crypto, and that's a very important function for the whole industry. Now, I think the challenges that I see and we experience, and I actually invite everyone to as a whole industry for the crypto community, the builder community, everyone needs to solve these challenges together. And this is where like I invite partnerships all over the world. There are three challenges that prevent the whole industry from growing. Number one is blockchain scalability. So we have seen use cases, and these are on our website. You can go and see the case studies on these. There are large companies who have hundreds of millions of users who are experimenting with blockchains. They want to actually develop various use cases. Example is Grab in Singapore trying to distribute purpose-bound money, or Singapore's Project Orchid related coupons to users. Now Grab has 200 million users. Which blockchain today scales for that volume? I think despite all the claims, we see that there are inherent performance issues in blockchains where block space is limited, and an enterprise wants reliable, robust infrastructure at very low cost. You cannot imagine like, oh, okay, if there is a spike on AWS, your transactions or your data rights will start failing and your costs will spike through the roof exponentially, right? Like there is no concept of a gas price on AWS. So similar to that, if you're thinking of Web3 as infrastructure for the internet, then we have to solve scalability problems. That's number one. The second bucket of challenges is in UX. Now, again, because blockchains don't scale, any application that finds any kind of success wants to offer reliable performance. And so it ends up creating any application developer, they end up creating their own blockchain. So you can see there are 1,000 plus L2s and app chains that are live today, and this is not slowing down, it's continuing. Now, the poor user who has to use numerous applications, now they have to do all the asset management across different blockchains. So there's like massive UX fragmentation. Now, if you think about like, if I ask you Tarusha, how many apps do you have on your phone? I'm sure you have like 50 plus applications. If each of these 50 applications has its own blockchain with its own native assets, or your assets are distributed across all these, and you cannot use your money from an Uber account into an Amazon account, or vice versa, because they are on different chains, that creates such a terrible UX. So how do you expect users to be able to utilize the power of like this beautiful technology that exists? And the UX problems, or defragmenting UX and liquidity, is like problem number two to solve. And then lastly, it's regulatory and compliance hurdles. We have to educate and we have to partner with different governments around the world to help them understand why this technology is beneficial for everyone. I think there is like the ethos in the purest sense. There is this sometimes there is this sentiment on like the government is against us, but no, the government is just trying to protect people in most cases. So the industry will not succeed. No industry has succeeded in the in the face of like without at least helping the regulations evolve to adapt to the technologies that we are being built. You see all the way for AI, you see Sam Altman sitting in White House trying to explain to regulators how will AI work, or you see like Uber, Travis Kalanick did this, and others educating like why the taxi related laws or transportation laws around the world are dated and they need to be updated. So companies can affect change, industries can affect the regulations, but it happens with like there's a balance between a groundswell of adoption and then education. And I think like that cannot be underestimated. So these are like the three: regulatory and compliance, UX, and scalability, I think are the three top of mind challenges.
Right, I think scalability, UX, and regulation, the kind of those are the main challenges that any entrepreneur also faces if they're building in Web3. Now, coming to the other question that I had when you were talking about stablecoins, there is always a little chatter about centralized stable coins as well as, versus decentralized stable coins or decentralization in stable coins to, just improve the ecosystem further. What is your take on that particular chain of thought that, decentralized stable coins are a better bet as against a centralized stable coin?
Yeah, there is it's decentralization for the sake of decentralization is it's it'll always stay niche is my thought. So let's like break this down a little bit, right? Like you could think about like USDC if you think it's operated from Circle and Circle is a centralized company, sure. But then USDC enables so much of DeFi activity, right? Like there is a majority of the use case of USDC is DeFi, is decentralized finance. And so all the exchanges, all the DEXs, they have their USDC pools, they have trading pairs in USDC and so on. So in order to enable decentralized activity, Circle adopts a regulated, centralized approach so that DeFi continues to thrive. Now, in a purest sense, you could say that, oh, you know what? DAI, as an example, is a decentralized stablecoin because its governance is fully decentralized. Sure, a lot of it was collateralized until recently by USDC. And if it is not collateralized by USDC and it's directly collateralized by US Treasuries are issued by the Fed, which is a centralized government. So it is the ethos of decentralization, where you have a decentralized set of validators who are enabling transactions to be written, and no one centralized activity from an infrastructure standpoint can bring down the system. That is something which is important. But decentralization also has a coordination cost associated with it. Because by definition, if something is decentralized, you are going to wait for consensus, which means there is scalability problems, which means there is UX problems that originate from it. So to me, like there is always a practical balance of how much decentralization is good enough, as long as we can, I'm a product guy, as long as we can abstract the complexities associated with decentralization from UX, from scalability, I'm all for it. But I think we as a community can decide like whether there is no right answer. There will be some products which will always be decentralized and their value will be limited to what the value props they offer. For instance, like if Bitcoin is completely decentralized, it is great. It's going to work great as a store of value, but it will not work as a good medium of exchange. You cannot think about like your grandmom utilizing Bitcoin, paying 0.00008 Bitcoin to buy vegetables, right? Like that just does not happen. It's not a good user experience. The transactions don't settle with Bitcoin fast enough. So you cannot use it for consumer payments. There you need something which is where pure decentralization breaks both scalability and UX, right? And then you have stable coins where there is a reserve management component, which is to protect people. And so that reserve management cannot be decentralized, or if it is decentralized, again, there is coordination cost. So you will not get one-to-one redemption instantly, 24/7 around the world. If you like decentralize like financial governance fully. So that is something which again, it's a property. It's a feature. It's not a bug. Centralization is a feature in some cases, and it's not a bug, is my point, because it delivers tangible user benefits.
Right. Yeah, I think, I have to agree with you there that what you kind of started with, that decentralization for the sake of decentralization should be avoided. And at times, some things are better left being centralized, like you said. And there is no right answer here. I think people make their own informed choices and they kind of move forward. But it's good to see that, stable coins have really been able to penetrate the market so far, and they've done so really well. Do you feel that you get a lot of resistance from, say, traditional financial entities when you're talking about your product, or, when they see the kind of impact that you guys have made?
I'm thinking about it. Like, no, we have
Hmm.
partners across the board who are
Right.
who range from skeptical to curious to enlightened, and they want to they want to participate in this thriving ecosystem, in the thriving Web3 ecosystem. So we haven't faced, like, when you say resistance, we haven't faced that, oh, you are this scenario, at least since the time I have been here, that, oh, you are Circle, or you're working in crypto, so we do not want to work with you. I think most like Web2 companies, the traditional players, they are generally just waiting for regulations to evolve, because they have these non-crypto businesses, they are like, they have a lot to lose if they take missteps, right? Like, financial regulations are not to be underestimated. And it's interesting, like, I come across a lot of developers as well, and like, we work with developers from from all fields, ranging from like consumer brands to infrastructure developers to building financial applications, and um, and this includes, by the way, like me when I joined Circle. I think like the understanding of uh, just implications of moving money without licensing, or without understanding the sanctions laws, or why does KYC or AML exist. I think a 101 of this is really helpful when you're working with financial products, because the implications of not doing it right are, it's like you can get started, but the minute you grow big, uh, you will be in a little bit of trouble. So the larger Web2 companies, or the traditional companies who are large businesses, they know this. They know about their compliance teams, their legal teams. They know about what the gray area is. They know that the regulations around their regulatory clarity hasn't emerged in many countries yet. So that's where they are either skeptical or curious, and they're curious because they want to understand, how is a large business operating in crypto, and educate us and let us know what can we do here. And they always start small. But like, my instinct is, like, the minute the regulations become clear, a lot of these players are going to start jumping in, and you already see that happening with like BlackRock creating the BUIDL tokenized treasury, and you have like ETFs that are, again, driven a lot by the traditional players. So they are stepping into Bitcoin and Ethereum ETFs, and that's their, like, they're testing waters. They're offering these assets, digital assets, as part of like traditional investment portfolios, and you'll see them like building more and more. Like, inherently, the advantage that I think of for a traditional player is, like, it expands the demand side of their products, right? Like, for instance, not every a user in Thailand, in India, in any other part of the world does not have very easy access to tokenized treasuries. But today they can get access on the blockchain to BUIDL, or not every user, but like accredited users can get access to BUIDL, or they can get access to USDC or USDP, or numerous stablecoins. So in some form or fashion, they are getting access to a stable Federal Reserve currency that otherwise they wouldn't have access to, and that's like a massive expansion of the demand footprint, right? Like, so you have everyone connected to the internet suddenly becomes your customer, or has the potential to become your customer if you're a traditional institution. So I think that opportunity is not lost on the sophisticated players. It's just they need more clarity on the regulatory side. They need to see that the technology and infrastructure scales.
Right. You kind of put it in a wonderful manner. And I completely concur. So I think just envisioning what you've said is leaving me at a loss for words. But I would love to know, what is the next big milestone for Circle? What is the next big dragon that you guys wish to tame, perhaps?
The next big milestone for us.
Yeah.
Let's see. We have a bunch of exciting products in the pipeline, but I think we are working on improving UX through some chain abstraction. We are working on a faster way to move USDC across blockchains, so like a faster form of cross-chain transfer protocol. We are working on, like, we are big believers in account abstraction and what it enables. We are working on making scaling up account abstraction more. So there are numerous products that are along these lines of solving like scalability and UX challenges or fragmentation challenges that I'm actually really optimistic about, that in the next 1 year or so we can get to a point where we have good enough UX for people to be able to use their assets across chain.
That's wonderful. So that's you are really focusing on the interoperability aspect. Would that be correct?
Yeah, it's like access to the way I would think about it is like access to USDC 24/7, regardless of whichever fiat currency you hold. That is like probably one line of thinking which is really important for us to keep onboarding more and more users, is how quickly and easily can you get access to USDC. So that's one. The second is when you say interoperability, it's more interoperability again is it's way to solve fragmentation. So I think about products that will solve scalability and issues and fragmentation of UX and liquidity. So that is where like cross-chain transfer protocol, account abstraction, like paymasters, and in our programmable wallets layer, enabling like plugins. These are some of the things that we believe will help with that. So that's something is the second, like bucket of things that I'm really excited about, that we're going to launch over the next few like iterations of. These are all, by the way, products that are already in the market, being used broadly. But the next iteration of these products, I think, keeps getting better. So I'm really excited about the improvements that we are about to ship.
Right. Yeah, I think those are very fundamental problems that plague the industry, and just finding new ways to perhaps solve it, sustainable ways to solve these problems, is going to perhaps lead to far greater adoption, which everybody sort of keeps talking about in the ecosystem. Talking a little about the ecosystem now, and zooming out from Circle, this particular market cycle has seen certain newer trends come in this space. There are AI coins and whatnot. There is always something new that keeps happening in the Web3 ecosystem. Do you have is there any particular trend that has really caught your eye? You feel that this seems to be a niche that will perhaps do well in the next, say, year, 2 years?
There are, a couple of interesting areas are, when you think about, so it's very interesting you ask that question, because I think about like there are infrastructure trends that I see, like, yeah, there are trends because the problem is prevalent, right? Like chain abstraction, intent architecture, for instance, intents. It's a trend. It was at least something which was trendy, that everyone's talking about intents. But why do intents exist? They exist because your fundamental way to accomplish a trade or accomplish an action is complex and it is hard. So intents are a way to simplify UX. I'm like, sure, that is one way to simplify UX, and I think that intents are powerful if you can accomplish. If you can say that, okay, get me the lowest price Ethereum with the USDC I have, and then you're abstracting complexity of like finding which blockchain and which DEX or which exchange is going to give you the best rate, and you're just getting that job done. That's how it should operate, right? Like, so that makes sense to me. I think like chain abstraction at ECC in Brussels, this was like heavily talked about. It was a hot topic. There are numerous developers building or talking about it in different ways. Yes, it totally makes sense. It's something we have firsthand experience because our customers are facing scaling issues. So, or our when we see like users facing fragmentation issues, like it totally makes sense. So these are like some of the more obvious things that are like much needed, and that's fine. I think on the AI front, like another, if you want me to say something which is completely out there, is like agents paying each other autonomously is something which I think is bound to happen at some point. So if you project outwards from there are like the chat different AI agents that are created with your language models are open source. You can create special purpose bots that will do certain jobs for you, create like micro content, organize your calendar, take meeting notes, and whatever. And you think of these bots as freelancers. These freelancers need to get paid. How do you pay them? It's harder for them to get a bank account, but much easier for them to get a crypto wallet. And so if an agent has a wallet, you drop, and you can code a smart contract where you drop some if you drop some assets into the smart contract or into the wallet, and if there is enough value to those assets, the agent will do the job for you. And this happens like automatically. It's easy to program. So I believe like that is something which will exist. And now again, I don't know if this is you call it a trend, but it's something which I think a lot of people do realize and so are excited about or building towards. From first principles, it seems to make sense that these, if you believe that there will be, there are like a series of ifs for any trend to succeed, and you have to find out like if any of these if then else statement breaks, then the trend is not durable, right? Like, so the assumptions that we have are if you believe that there are going to be microbots that will do certain jobs for you, we have enough reasons to believe that's true. If we believe that they can operate as freelancers and given enough data connectivity. So for instance, if they have permissions to read your email, respond on your behalf, or organize your calendar, that already exists. There are like note-taking with Firefly, or clockwise manages your calendar and so on. So that's already, you can say that, yeah, that is reasonable to expect. And then you can say that, okay, if these can operate as independent bots that are coded as freelancers and they need to get paid, they can spin up a wallet, they can spin up a contract. That's also true. So the assumptions are, of course, like they will do a job well. Assumptions are that you will have recourse if you're not satisfied with the job. So there's a lot of experience that needs to be built around this, but it seems that this world will exist over the next few years.
I do think that, the examples that you've given are quite relevant in terms of what is happening right now. I mean, yeah, as you said that it does meet a lot of the criteria that people have in what AI agents can perhaps do. And maybe this is something that can find a good PMF with a good consumer case, with good utility, and it'll find good traction. Do you have like a take on real world asset tokenization? I know that, I'm asking this with a touch of irony because, you're doing a USDC, obviously, but in terms of other assets, other real world assets, do you feel like that the builders who are building in this space are doing a good job? Anything that has caught your eye there? Because again, it's not easy to do real world asset tokenization. I've been there, done that, and it was really hard to do it. Like we tokenized gold and silver on Tezos, and it was there are too many hurdles, and there's a lot of compliance that is required. There's insurers and whatnot. So it's like a huge list of things that need to be done. But because RWA has again become a big thing currently in this particular market, right? So, okay, do you have like an opinion there?
Yeah, and thanks for asking that question. Like, I think like the RWAs again, if we think from fundamentally, like, why should RWAs exist? RWAs should exist because the demand footprint with crypto is much larger because it makes your assets available to everyone on the internet, right? So what is the biggest RWA that is created today that exists? USDC is the biggest example of an RWA. Stablecoins are fiat-backed stablecoins are the best example of an RWA, right? Like you have, and they exist because there is demand for it. So similar to that, like the BUIDL token from BlackRock, it is an RWA. Now, when you see this RWA movement, what you're seeing is the reason the volume is up or the noise is high around RWA is because we see large traditional players, Franklin Templeton, BlackRock, starting to issue their digital assets through Securitize, through Circle, and so on. Right. So the need for, I think like the question is like, what assets make sense as an RWA, right?
Right.
So
Right.
that like earlier we were talking about decentralization and the benefits of decentralization and so on, right? So any kind of physical asset, there are tokenized real estate. There was in April at Paris Blockchain Week, I met a company that was tokenizing water. Right now, the interesting concepts and projects. The challenges are like how do you validate? How do you protect the user? You mentioned like security and compliance, right? Like that is a big hurdle because how are you going to ensure that in case of a dispute, there is someone who's resolving the dispute. The
Right.
demand footprint is not global for it, right? Like a person sitting in a small country somewhere buying like tokenized real estate. If that real estate is like there's some fraud, they don't have recourse. They don't have easy recourse. But in case of a liquid asset like an investment fund, like something like Biddle or USDC or a tokenized stock, there could be easier recourse. Like liquid assets to me are like expanding the digital footprint of the demand footprint for liquid assets is probably makes a little more sense. But again, like never say never, right? Like I don't know that which assets will have inherent high demand. For instance, like if there is like imagine this, right? Like if Bank of America or BlackRock offers tokenized real estate or REI, I think REITs are kinds of like they allow REITs exist already today. So these are basically you can buy a small part of a shopping complex or a small
Right.
part of a real estate
Fractionalizing
investment
is
property.
there. Yeah.
Exactly, it's there. So now, if they're a reliable party, and this is where the TradFi players could be very interesting, because if they come in and they have all the infrastructure to offer such investment products, then RWAs from them makes a lot of sense, right? But if you have a small developer shop trying to offer the same thing, then it's a very risky product to offer unless you have the infrastructure to protect users, you can comply. So the hurdles are too high in those cases. So but again, startups exist for a reason. They exist because traditional players don't move fast enough or they have inertia. So there might be a startup out there which has the right set of people working on these problems. Goldfinch is a good example, right? Like it's I think the Goldfinch folks have like financial management background, and they understand, and they were doing like tokenized investments into international properties. So we have seen examples of like companies that have been working in the RWA space for a while. It is hot because there are like large traditional players starting to move in and realize this potential of offering the tokenized assets to a large number of people, like 5 billion people connected to the internet. So I expect this space to grow over time. The question is like, which are there recourses for people for newer innovative assets? How do we ensure user safety? I think those are some of the questions that I don't have good answers to.
Right. Yeah, I do feel that, there's a market here and it's a tough nut to crack, but then as you said, that is what startups are there for, to be able to perhaps, move fast and be able to figure out these things. So, just seeing the time and we are running out of time, but I would love to ask you two more questions and wrap this up. You've spent a considerable amount of time in the tech space and, you've been working in Web3 as well for nearly, half a decade or so, right? So I would love to understand from you, what are the kind of, what is the advice that you would perhaps give to entrepreneurs or builders or even folks who are looking to perhaps, join Web3 companies? And what would be your two suggestions perhaps for them, given the current market scenario?
So the suggestions for, you said like suggestions for, you broke off a little bit. So suggestions for builders and Web3 companies that are new in the market?
Yeah, builders who are perhaps just starting off, or entrepreneurs who are in the market already, or perhaps somebody who
Yeah,
wants to join a Web3 company. What would be your
yeah.
suggestions to them?
Okay, got it, got it. So if you're entering the space and evaluating a new company, I would ask this fundamental question, like, what is the value that the company is delivering, right? There are
Right.
generally, like every business has three things that they want. They want to make more money, they want to save costs or reduce costs, or they want to improve user retention, which leads to, again, either saving more money or making more money. So grow LTV, find new revenue, or lower the cost. So this is like the foundational truth for every business, right? So as a builder, if you are building a new business, think about like, how are you going to enable your customers to achieve one of these three? If you're joining an existing business, deeply question, how is this business adding value in one of these three buckets, and cut out all the how or the cool technology features they offer, and think about, like, where the value is coming from. Is it something that is going to sustain and grow over time, or not? I think, like, having a really honest look at the business, despite the hype, despite like the charisma and charm of the people who are pitching you the business, that is a really, really important thing to do.
I would completely agree. I think it's very important to understand and figure out the fundamentals there. What is the vision? What is the value that is being delivered? And that goes for entrepreneurs as well as folks who are trying to perhaps join a company. Like, what is the vision that you're building on? What is the value that you're going to be adding? And how are you going to make money? So that is good advice through and through. Now, on to my last question, Gagan, and this is something I ask everybody who comes on the show. You had also made quite a leap from Web2 to Web3 in the early days. What would be your suggestions for somebody who's facing this same dilemma? Because you have said earlier, decentralization for the sake of decentralization should be avoided. But if somebody is trying to decide, whether they want to get into Web3 as a user, or as somebody who wants to move from Web2 and start building in Web3, what would be your advice to them for them to start living on blockchain?
As a user, be prepared for some pain initially, because we are still, as an industry, we are still working on improving the fundamentals. It's like, just like how you initially, when people adopted the internet, there was like dial-up, and there used to be Walkman before there was MP3s in music, right? There were video cassettes before there was Netflix. So the crypto industry, the crypto experience, and the UX and scalability is evolving. So that's why I say, like, as a user, you'll need to be a little more patient. So that's like one. As a user also, like, you have to be, very careful, like, depending on what your risk appetite is, in what assets are safe to use, what assets are risky, which wallets are safe to use, which are risky. So if you are risk averse, then start with a trusted exchange, a trusted party. I think CoinDCX folks are doing really good. They are so as an example, I have no affiliation with them, just like I based on my understanding and reading it. But like, start with them versus, or start with like a Uniswap or an Aave, which again might be a leap for a completely new user. But if you use DeFi, you'll experience the power of what the industry is all about, and the ethos of decentralized finance. It is extremely fascinating because it breaks the mental model of, like, how a bank should exist and operate, and how you can exchange value with anyone around the world. So my advice to the users is, come in with curiosity, operate with patience, and a little bit of caution, exercise caution, right? For builders, it is that you have to, like, start from fundamentals and focus on solving core user problems, core user needs. And, like, this is an open invitation to builders to get in touch, build with not just us, but, like, find the people you can understand, that are operating with maturity, and like operating from very clear principles, because your time is really precious, and you want to invest that time in things that matter. So don't chase the hype train is my one piece of advice.
Yeah, don't chase the hype train. I think that is just good advice to
wrap this up with. Thank you so much, Gagan, for making the time to speak to me today. This has been a really insightful conversation. I'm sure my listeners will enjoy it.
I appreciate the conversation, Tarisha. Thank you so much.